What are your expectations, and do you think the market's got it right, at least for this year?
Well, I still think the Fed's going to tighten later in the year. I think we're in a period, I think it was exceedingly well timed that the Fed kind of basically took 3 to 6 months off because we've got a lot of noise going on right now. It's kind of tough to say where the economy is. But I think when the dust starts to settle a little later in the year, we're going to see that the economy is still in pretty good shape.
So implicit in that, trade war will be over. There won't be a new brewing trade war with Europe, for instance, and we'll sort of know where things lie.
Exactly, and first quarter growth is going to be low because of the shutdown and the weather and some of the other special factors. That should work its way out as it has in several of the past years.
Bob, what do you think?
Well, I agree. I think we'll probably get one more rate hike, but I'm thinking of it more as possibly a mistake. I'm really taking a lot of my cue from the yield curve, and I think the yield curve has been very flat, and the Fed has done its level best for a long time, going back to Janet Yellen, to try to ignore this, right? She looked at the TIPS yield curve and derived yield curve, and she kept talking about, well, it's not inflation expectations, it's inflation compensation. And the board has always had a hard time dealing with markets. I think they don't like to put this emphasis on markets. And I was at the New York Fed back in the late 1970s. And at that time, the people at the board were very much in love with their models and not much in love with the markets. And I really like the market signals a lot. I think the markets know what's going on. I'm very concerned about the new flattening of the yield curve. And I think the global economy is still in difficult shape. And I don't think the economy is going to snap back that much. I think the economy is in a little bit more trouble.
I mean, I think that would be a real concern, inverting the yield curve. And if they go, then, that could happen at this point.
Yeah, I mean, this is an interesting and age-old question of who's driving the train here. Is it the markets or the Fed, right? And I think the expectations with respect to the Fed right now in the markets are very dovish. We have a part of an ease priced in by the end of this year. So if what the Fed hopes is if the economy does a little better, the market will follow along and the Fed doesn't have to kind of jerk them forward.
Right.
Steve, what's your growth forecast for this year? And we asked a question, which is, have you changed your forecast for potential growth because of the tax cuts? 60% said no. Of those who did, they added about 40 basis points. As I recall your commentary, you're more optimistic about the ability of the tax cuts to deliver growth this year. Talk to us about that.
Absolutely. I just think that it's unrealistic to believe that all of the beneficial impacts of the tax cut on investment took place in a 6-month period.
Right.
These are multi-year projects. They take a long time to be planned, executed, delivered, and then incorporated into business practices. So I think we are starting to already to see a bit of a pickup in productivity growth. I think trend productivity growth we're going to find is a little bit higher than where it had been before, which means, I think the economy can do better this year.
So give us a number.
I'm in the high twos.
High twos. For this Bob, is that right, or are you writing off the tax cut for this year?
Well, before Donald Trump took office, I wrote an article on Seeking Alpha that had 5 points for Mr. Trump to be careful of. And one of those points was that he needed to make sure the U.S. economy is competitive before he gave us tax cuts. If you give us tax cuts in an economy that's not competitive, what happens with it? Nothing. And this is what's happened. The dollar is still too strong. We're an uncompetitive economy. So you've made the tax rates lower in an economy that isn't competitive, or wages globally are still too high. Americans complain about low wages, about the low increases, but globally our wages are high. We're uncompetitive. People aren't building factories here. If I gave you $1 billion, you wouldn't make a factory in the United States. And so you're having tax cuts to make it more profitable to do business in a country where it's not profitable. So of course there's no impact, and no, I don't expect any further impact toward the end of the year.